Officially welcome everyone to the Options Income Launchpad Sunday Market Insights. My name is Scott. I will be your host. As always, what we'll do today is for education and illustrative purposes only. Nothing is intended as a recommendation to buy or sell any security or financial product. We're not brokers or advisors, so nothing we do should be considered personalized investment advice. Any decisions made based on information on the platform is at your own risk. Yada, yada, yada. Hi, Vladimir. Good to see you, as always. Let's do market posture, obviously. Market calendar, or economic calendar. Let's look at last week's. We didn't talk a ton about the jobs missed. Jobs miss, not missed, miss. But, the instant thought is, we had a bad jobs report, Fed. I don't know. It'll take more than that one miss. But certainly that's concerning to us. Sectors. Do we want more defensive representation? I think we're going to see increased decline. Is this enough that it feels more than a consolidation? No, and our posture hasn't reflected that yet. But if it at all escalates from here, then we start thinking, whoa, this is turning into something a bit more nefarious. And you might be thinking, I didn't realize markets could be nefarious. And the answer is, of course. Of course they can. Okay. Let's jump in. Oh, trading plan section of the week. We're on to, this is how fast we go, you guys. The trading plan section of the week, we are on to section 6. What have you done? You've done personal info, market routines, trading rules, risk management, routines. Now what? With all of that in place, we move on to record keeping. Record keeping. So it's about making sure you have a trade log. If you don't, that your trade log is up to date. If you've fallen behind, record keeping. Because Section 6 record keeping leads to Section 7 analytics. So what do we do in order to produce the numbers that are going to be the most useful to you? Those are the next 2 weeks. We'll talk about that a little bit at the end. Let me see if I just lost my connection here. I think we're actually... Nope, we're okay. We are okay. So let's dive right into the market posture. Let's dive right in. Let's orient a little bit while I grab the coach. While I grab the oracle. Let me grab the oracle here. Okay. The oracle. Shubundi. Okay, here we go. Here is the oracle. And we are going to dive straight in for long-term analysis. And this is my first concern. Oops. So let's get the SPY. Let's go into The 3-year weekly, what do we see? A couple of things have happened here. I moved one new thing and it's not necessarily in the right place, but just to have it available. This purple line actually was moved from down here, and that purple line comes from way back. But you'll notice how we actually oriented around that. So I've left that line up there. But I took a replica of it and I moved it up here just for, what is this, the incline of that next level down. That was a one line from a while back. Why am I saying that? Because we broke below this line that has been holding. This red channel has been the most stable part of our analysis. 1.25 all the way back. The AI has it as 125 all the way back. and that's been the one where I say, oh, it's easy. We're still in the channel. Same score. Still in the channel. Same score. Still in the channel. Same score. Week after week. And now what? Broke the channel. Broke the channel. And it's a different representation, but with above average volume as well. So, yes. Let me do two things here. First, let me grab a picture for us to feed our machine. You guys are not seeing the screen? What is going on here? Hold on a second. There we go. Sorry about that, you guys. My chat just got buried. I did not realize I couldn't see it. Thanks for the nudge. Okay, sorry. Let me go back. You guys have been seeing the welcome screen the whole time. Let me go back and just real quickly orient. Then here's the Oracle, or here's our market posture. Here is the Oracle 1.25 across the board. That's all that I was showing. You didn't miss much. So let me. Sorry, guys. Here we go. So let us put the picture. This week's chart for analysis. And it is 06/08/26. So for me, we are dropping down to a 1. So that's, I think, significant, because if you look at where our score is, that has been the most stable analysis, period. Most stable analysis. I'm very curious to see if the Oracle is going to make the same change. Let me see here. This is. Oh, I didn't post it. Hold on a second. Let me get this picture one more time. And now put it here. Oh, I put the wrong date. I think it'll get... Actually, I'm going to stop it. Okay. This week's... Oh, it went unchanged. I thought I was going to have to post it again. I'm not going to mess with it since it gave me the score as is. Okay, so I'm going to let it go. Even though the AI, ours was very much determined by one specific line, the AI says it's going to leave its score unchanged. Let me see where everybody else is. So I'm a 1. The model's a 1.25. Welcome, Press. Haven't seen you for a while, my friend. Good to see you. Dropped to 0.75. Okay. Yeah, I was very curious about that one. Let's move on to the short term. Find our rhythm here. Sorry for the... Okay, let's see here. Let's take this to 6-month daily. I mean, this would be a tough one. I'm doing the same thing here. I'm dropping my score another 1/4 point. You can look at the last 1, 2, 3, 4, 5 days. So this is where we finished. This is where we are. What did we get? We got this. That was the net impact, which did what? It broke below all of these lows right here that had been holding, and then what happened? We broke it. We're down here now. So yeah, I'm definitely dropping mine 1/4 point. Let me get a snapshot here. Let me get a snapshot. Let's go back into... I am going to want to go in this one. There was a couple of like mixed conversations where it's like, wait a second, that's not... We just want this output here. What's the score? What's the rationale? What's the continuity? It still sees this as a pullback in the broader uptrend rather than a structural break. We saw it break below a red line that was very specific. That's why mine changed. So let's go into the short-term analysis. I will get my date right this time. This week's chart for analysis. 03, 08, 26. Go. Okay, so I am down to a 0.25. Now, for anybody who is new or newer, A, make sure you ask questions. B, make sure you know that there is an entire video course that explains each one of these components one by one. And what is interesting, point of fact, the information used to teach our model was the transcripts for those video lessons. to establish what we do, how we do it, yada yada. Anyway, kind of an interesting little tidbit. So I dropped to a 0.25. The model's been at a 1. This is one place where we have really diverged. So I'm super curious. And last time it's like, I'm going to drop it by, I could see it dropping it at least a half a point, but let's go see. Score 0.5. Down from 1. See? The model's a bit more volatile, which means things like that happen, but that makes sense to me. That brings us closer, even though it left its long term alone. 0.5 drop there. Okay, so quick check-in. Where's everybody find themselves? Don's a short-term 0.25. I think that makes sense. That's where I am. The model's getting a little, or the oracle's getting a little closer to that level. Volume presses 0.25. Love it. Volume. Okay, here is the snapshot. What are we seeing? Well, let me actually go post this before I lose it on my clipboard. Uh, 03, 08, 26, and oh no, I can't do that yet. Sorry. We need to adjust this first. We need to duplicate the rectangle, move it over. Why? Because we had above average. Because on Friday, average volume was 84 million. And we had 100 million. That's 16 more. That's 20%. 20%. So we need to put... And what happened? The market dropped 1.3%. The market dropped 1.3%. So that is a sell. Now here's the thing. Technically, all three of these are sells. But you'll notice it's getting credit for this sell here, then this sell here, which is technically higher, and then this sell here. So I'm going to make a discretionary ruling. And I'm gonna cancel this one right here. I'm gonna cancel it. I'm not gonna give it all three of those because even though there wasn't volume on this day, it got it high enough that the next day's volume didn't even bring it as low as those were at the same place right there. So these two are basically achieved the same objective. Does that make sense? I don't love putting discretionary well, now I'm going to do it this way, but I feel like there's a good price explanation behind that. However, that is still going to leave us with 1, 2, 3, 4 sells, 1 buy, 1 tie. Now, it's right at the edge for me. I'm gonna still just go down to a 0.25. Right on the edge of what? Possibly a minus 0.5. which is where actually Don finds himself. Minus 0.5. There's an imbalance, and there's a negative, not here. Starts here, ends here. There's our slope, minus 0.25, maybe even minus 5.5. So my volume is going to drop back. And so as we were talking Friday, I said I think I'm going to be at least 3/4, if not a point lower. And I knew these first three were likely to be shedding some quality from the market. Things aren't, I mean, we've looked for stability. We got 3 weeks in a row, same score, stabilizing. Stability would be we bounce back up 1.5 to 2.25. We never did that. We stabilized, like we stabilized a little bit. We were stabilizing, but stability with no recovery is. So, okay, let's see. Let's see where the Oracle put the score. This week introduces no new initiative. Whoa, what? Now see, that just feels like a misread. Oh, did I not place it? Oh, I haven't placed it. Sorry. I was going to, then I remembered I had to label it. So, man, I'll tell you guys. I am okay. I'm gonna get it together before the hour is up. I'm gonna get it figured out. Okay. And now let's see what it really thinks this week, because last week it held at 0. And we're going to go. Actually, we can't go. We got to wait for this. We'll let it think a little bit. Okay, now look at this. It did the same thing we did. Lost hour of sleep. Melody, you nailed it. It's daylight savings. It's having that little impact that it has. Okay, 2 expansions, 0. Buyer expansion. Oh, there you go. It kind of took its own little. It stacked a seller expansion and said that's a minus 0.5. Okay. I said that's where it's like on the fence of. So minus 0.5 it is. Well, that's a pretty quick catch up. Oh, right? So I'm a 1. And the Oracle is a 1.25, so we're very, very close on those first 3. Let's go do major market. Let's go do major market. Economic calendar. So again, we didn't really talk too much about this big miss here. Big employment miss. The new jobs, it's not looking good there. The unemployment rate's peaked up a little bit. Yeah, obviously that's concerning. This week, what do we have? Nothing Monday, nothing Tuesday. No one cares about an optimism index or existing home sales. We do have CPI. That's a big one. And that's been our lowest number down here. And as of now, the expectations are that they're all going to stay the same. Core's going to drop by 1 tick. Standard's going to increase by 1 tick. Jobless claims are still in an okay place. And then we'll have GDP expected to come in at 1.5%. Income spending, PCE, that's the Fed's most favorite. That's sitting closer to 3%. And job openings, interestingly, expecting a little uptick there. So kind of an interesting mix of economic data, but plenty of economic data. All right, let's go do this. Let's close you. 200 days all the way over. Get a picture. And let's go to major market 0, Don said. Okay. Where am I? I'm starting from a 0.25. Oh, another drop there, he's saying. That's a possibility. That is a possibility. This week's charts for analysis. 03, 08, 26. There's one. There's a 1. Our chart shows kind of broad-based. It wasn't like the Dow surged while other things dropped. Everything dropped. From this perspective, it looks like maybe there was a bigger, but we'll see as we zoom in. But this is still showing small caps at the top. NASDAQ second, then the S&P, the Dow's last from this perspective. So this looks still holding up. And then here, what do we see? We actually see the Dow moving down and catching up with the S&P and the NASDAQ. And the Russell still holding on. Now, everything is dropping. It's broad-based, what we're seeing. What we're asking ourselves with this analysis is, do we see a shuffle occurring that even though there's been broad-based selling that indicates something deeper is happening, right? Something deeper is happening. As of right now, certainly we're seeing a huge, right? This has dropped from 12.5 down to 8. This dropped from 7.5 down to 5, right? It was like, it's dropping faster, but still holding its leading position as of now. So, I mean, with small caps in the lead of this, even with it being broad-based, that means it's going to maybe hold up the 0.25, maybe. Let's move down to 66 days. Nope, sorry. 133. Take a little image. And put the second one there. And now let's go back to 66. And we may as well just take a little image. put it here. What do we see? Like I said, broad-based. In fact, if you look at from like this last big drop that everybody had, the Russell's now lower than that. The Dow is lower than that. The SPY is only a little bit lower than that. And the NASDAQ is probably the closest to that previous level. So, can you hear me? Audio dropped for a second. I think my 0.25 may actually hold up here. I think I'm gonna say no change. It definitely, we see broad-based regression, but not in a way that indicates that the market is moving itself defensively while this is happening, right? And so, okay. Let's drop it to 22. Ooh, now there you can see the early signs of the Russell dropping its leadership, but at the same time, you also see the Dow at the lowest point on this 22-day. Where's Stephen D? Stephen D, weigh in. Where did you put it? I'm so curious where everyone is going with this. Was at a minus 0.25 last week, holding there, Gabe says. Thank you, Gabe, for that insight. I'm holding to 0.25. I feel like, it could be moving towards a zero next week, possibly. Steve C. also at a 0.25. What do we got going on here? Um, 0.5. 0.5. It's holding that 0.5. And it's basically using the rationale, at least one growth index still leads. I don't think that 0.5... oh crap, major fraud. Sorry to hear it, Gabe. Good luck with that. Greg says he's a zero. Stephen D. Oh, he did say he was traveling, didn't he? I don't know. I mean, I don't want to pressure it into moving its score. I feel like right now it's very trapped. It's like, basically it's saying that it's only a 1, a 0.5, or a 0. I feel like small caps are holding on by a thread. So it's hard to give it a 0.5. But when I see that Gabe says his AI is also 0.5, I'm gonna leave it alone. That's fine. Let's leave it be. What that means, though, is when it does score it, it's going to score it a half a point down. It's going to just be like, bang! It's more volatile. The AI is more volatile in its scoring than I am, I think. I've got a smoother. But to be fair, I designed the process to be smoother. That's part of it's my intention. It's like, don't make big adjustments. If you can help it, And then big adjustments actually stand out more when they actually do come, when you're like, oh, I have to give it this. I have to drop it by a half a point. Right? Then it's like, oof, that's serious. That's more significant. Okay. I don't bet my AI. I'm going to love it and hug it and feed it. This week's chart for analysis. 03, 08, 26. Sector rotations down to a minus a half a point, Don said. Woo! 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 Let's get there. Let me just... Oh, no, I don't want to... I want to just reload you just to make sure. Make sure it's fresh. Make sure it's all the way over. Obviously, energy pushing up to the top. Industrials was a ray of hope. It's struggling now. What else is in here? Materials. Tech is still hanging out in there, barely above. Communication services hanging out just barely above. Not much there. Doop. There's one. 133. There's two. Boom. Oh, more energy at the top. Healthcare's come down. Industrial's coming down. Staples coming down. Yeah, like it was building towards it quick, right? The oil prices definitely, the energy prices definitely were showing signs of stress. I mean, everything's down, but what's still above? That's the question. Technology is right with the market. There's the S&P. Where's the S&P? There it is. There it is. Communication services a little above, but barely at all. Other than that, it's materials based, commodity based, and defensive. So not looking good on the 133. Things got worse. Now we dropped to 66. So I'm coming in at a minus 0.5. The Oracle's coming in at minus 0.25. And you can see here... communication services still just a little teeny above it, which is nice. I mean, it's like, ooh, look. You still have industrials in there. You've got energy at the top. You still have materials towards the top. You still have staples. You still have utilities. I'm going to leave mine at minus 0.5. This is not a... It's kind of a bleak picture on our scoring time frame, right? Kind of bleak. Let's put this one in. And then let's drop it down to 22 days. Let's get a quick picture. And quick picture. Drop it in. Ready, go. And so I stay... Okay, so both of these stay the same. I wondered if there might be a change there. There's not. Definitely concerned that the VIX is going to pop up into a up until a negative score. Or down into a negative score. Sorry. Let's see if the AI stays at minus 0.25 or gets worse. Oh. The absence of growth combined with rising participation defensive stability rather than expansion confirms that stepping down as defensive participation broadened and growth sectors fail to stabilize. No, I don't want you to show me a fast structural trick. Don't offer to show me new tricks. Let's go to the VIX. And minus 0.5. Ooh. So I've dropped 0.75. The Oracle's dropped 1.25. A little bit worse of a drop than me. And lastly, let's go in 0.5. Positive 0.5 for sector rotation. Interesting. Yeah, here's the deal. I mean, the hard thing is it's like, listen, it's either gonna, we can intervene or eventually it's gonna have to adjust. But can we teach it as it comes to the recognition that it has to adjust? Can you teach it to then be like, did you miss that previously? That's the hard thing, right? That's the hard thing with models. Are we trying to optimize it potentially, or right? And so it's like, okay, we certainly have to be aware of that as we move forward. This is definitely breaking. I mean, you can see that 1, 2, 3, 4, 5. We were down here. We had already scored a higher low. This is a higher high. It got all the way up to the highest point, even above these highs here. We talk about this. We talked about this just expansion that could eventually lead to like that type of expansion. This is another one that I think that the Oracle could I'm dropping to a minus 0.25. It could join me in a negative score. I'm very, very curious. Risk sensitive but not disorderly. Feels a bit disorderly now. This week's chart for analysis. 03, 08, 26. Disorder indeed. Indeed. So I finished down 1 point. I'm in neutral. Haven't gone negative yet. Clearly the market is in we'll call it in a tight spot. It's in a tight spot. 0. Don said he's 0. His AI is a minus 0.5. Interesting. Let's see where the Oracle ends up. New score. Okay. It expanded sharply with the VIX surging to nearly 30, representing a decisive escalation. This breaks the prior controlled. Signals a transition from elevated caution into active spike. Disorderly risk repricing rather than routine hedging. What would move the score lower? Sustained closes above 28 to 30, adding higher highs. What would stabilize? Rapid collapse back below 22. Failure to sustain elevated. Mean reversion toward 18 to 20. Okay. The model is a 0. I am a minus 0.25. I now have 3 scores in the negative, 3 in the positive. I'm still a little bit more. So, what is my final score? I am a 0.5 overall. Don and his AI friend are lower than me now. I've been one of the lowest. Don is a 0. He's net neutral, and his AI has veered into negative territory. My AI, our AI, the Oracle, 1.25. 1.25. That might be one of the more bullish, it seems. Steve C's 0.75. He's closer to me. Steve D is 1.25. He's in line with the Oracle. Anybody else want to give their total? Give us a little range of where the group sees things now. Here's the deal. Our trading has obviously diminished a little bit. Even the alerts, we're not going to force alerts as markets are deteriorating. We might shift the type of alerts. The Dow chemical trade worked out pretty well. Gave you plenty of opportunity, and still it has to exit at least one of the targets. It's produced good gains, help offset the fact that you've probably had to take some losses. Here's the deal. We're clearly in a regressing market. So if you mark like January 18th was when we were at 4.5. And now we're at a half a point. So over the past 1, 2, 3, 4, 5, 6, 7 weeks, the market has regressed from a 4.5 solid bullish score to a 0.5. Very neutral. And then we go look and we say, well, let's go look at the market during that time. We go SPY. And we go to about January 18th, which was right through here. And you can see the market dropped, and then it tested. We tested here, and then it's kind of fallen. Then we tested, and it's fallen. It's tested, and it's getting lower still. From when you think about like, hey, what are the odds that you found some great trades? Well, there was maybe a good cycle here, a little piece there, a little piece there. There's been a couple of times where it's tried and then it falls apart quickly. It's like it starts and then it stalls. Starts, stalls. So if you're looking back and you're saying, man, it's been tough. Yeah. Has it been tough because you've been struggling? Or has it been tough because the way the market looks? Yeah, it's clearly the way the market looks. Which is why we do what? We've been talking about this for weeks. We trade less. We trade smaller. We have less risk on. I think that's been the most common theme. That's a great connection to trade activity, risk management directly correlated to market conditions. We've seen a broad shift to day trading. Yes. Right? Why? Well, because swing trading is getting harder and more choppy. Because the intraday movements are getting bigger, so there's more opportunity, i.e. as represented by the VIX. So it's just, you're not like deciding, here's what I'm going to do. You're saying, I'm going to shut up and listen, and the market's going to tell me what to do. Market's like, hey, this trade's not good. Do less of this. There's more opportunity here. If you're able, you can do more of this. Cash is a position. If you walk away from this whole meaning you're within a few percent, up a few, down a few, but during the course of a market, if this turns into a correction or even ultimately turns into a mild bear market, then recovers. During that time, markets are losing 15, 20%. If you're 0, if you're down 2 and the market's down 20, if you're flat or up 2% while the market's down 20, and then your market posture starts to increase. You start to jump on things again, and then start, right? Like, that's all we're asking for. We're not saying, hey, we expect to make the same money in this market that we were making when the market was bullish. No, we absolutely don't expect that at all. We have zero expectations along those lines. Okay, let's do our watch list. Questions, comments, concerns about this posture, about what you're doing as a direct result of this posture. Let me know. Is this where I am? Market posture? That's a different one. I think I have two of these open. I don't know why that is. I'm going to save this. Close this. Browse. There. Save. Yes. Okay. That was weird. Okay. All right, we've looked at the calendar. We've talked about this week's trading plan, which is record keeping. If you don't have a log, go download one. Go to the group downloads, download one. What's on the menu? I think Alcoa is on the menu. Basic material still looks good. This thing's above the 50. Holding. Apple. I don't have my 100 or 200 on. I'll put them back on later. Let's do this without them. I'm going to say maybe not yet on Apple. There could be some opportunity there. I think Archer Daniels still looks good. Actually, I'm going to put Apple on. Apple could hold that support level. Archer Daniels, yes. Applied Materials, I'm going to still put yes on that one too. The A's are fruitful. 4 for 4. AMKR, I stopped out of that last week. Took the loss. Moved on. Wasn't terrible. Amazon. I'm going to put Amazon on the list. It's made a little bit of a turnaround. So if it makes another little higher low through here, if it doesn't break back below, 205, it's a good opportunity. APH, no. ASX, still yes. I don't know. I think Steven has maybe a bit of a pervasive bullishness to him. He's always going to give the bulls a little. Okay. AXP, clearly no. BABA, clearly no. Bank of America, clearly. I mean, look at all these just pushing these new lows. BCS, pushing new lows. Bud is trying to stabilize around the 50. It's still too much of a drop there. Citigroup, no. Caterpillar, I would probably still say yes to that if it weren't for the fact that volatility's gotten worse and this thing already had bad spreads. I'm not going to trade it. So I'm not going to put it on my list right now. CF, ooh, the thing's popping. Coherent, yeah, I think that looks okay. That could turn into an opportunity for us. Cisco, yes. It's been just sort of meandering higher. So if this thing pulls back, anything above this is a higher low. So if it pulls back to 77, stabilizes and turns, and I'm thinking, hey, it could make a run. Delta, no. There's the diamonds. Dow gave us opportunity. I mean, it moved back into. So it gave you plenty of opportunity to close 34, maybe even higher, depending on how aggressively you managed it on Friday. And if you were still in some, I think it'll still give you an opportunity to catch a little bit more. But this one worked out well. Good gain. Better than 2-1. Let me know if you traded it. Let me know how you did. Let me know if you're still in it. Out. Okay. Yep. Makes sense. Still have one piece. Got it. Good management there. Love it. Love it. Ford is well down. Nothing there. GE on the list. We still have some good looking things in here. I mean, listen to the names. Alcoa, Apple, Archer Daniels, Applied Materials, Cisco, GE, Amazon. Some good stuff in there. Holding up. Fighting the good fight. Gold. I'm putting gold on the list. General Motors, no. Google. Come on, Google. Google, yes, for me. It held up. If it turns and starts to bounce, I would still look at it. I have a little affinity for Google. Goldman Sachs, no. Home Depot, no. HL, no. IBM, maybe on a pullback, actually. It V'd. And it could get back to 300. So it dropped like this, and then it got it all back and made the V. Which means, if I were to draw a line across this and think, hey, if this pulls back and does something like that, it could be making a run back up here. I'm going to put IBM on the list, actually. A little sneaky. Very sneaky. Still an increased selling after market on Friday. Yeah, that's probably true. At this point, though, I'm going to just let the after hours then drift to the pre-market hours now, which start later tonight when the futures open. And we'll see what the appetite is based on what's gone on, right, over the weekend with the conflict, etc. Intel, no. IWM, woof, dropping. Lumentum, down 15%. That stock is I just don't know that I have the appetite for it. Mm-hmm. Gabe said, I saw some analyses that the VIX surge is a fake out. I mean, it's very difficult to move the VIX like that without institutional participation at a heavy level. It's without the institutions participating, it can't really move that way. Now, we've talked about those types of sharp reversal candles. If we see it, we'll take its significance. Without it, we'll just wait, watch, monitor, see. LRCX, I took the loss early on that one. You can kind of see, right? Like we were looking for it to hold. And we got a turn with not a cross. It didn't give a full cross, but it definitely gave the pinch on the turn. I took the loss early. And that's something that we've talked about, right? Where in a different market, I might not take that loss. But in this market, I'm like, yeah, I'm done. It clearly reverted quickly. And it's like, okay, then that's it. MasterCard, no. Meta, no. Monster, no. Morgan, no. Microsoft, Microsoft is actually showing some sneakiness down there. It's been down for so long, but you can see that all of a sudden, there was a little bit more of a push that if this thing does something like that, I'm a maybe. I'm gonna put it on my list. If all we ever do is wait for well-established trends, we don't ever catch the turns. Well, I'm still gonna wait for my signals. Micron, no. Netflix, Took some gain on Micron. Nvidia down. Palantir on a pullback. I'm going to say yes to Palantir. Palantir. Pan W, that's a silver miner, I believe. Is that right? Pan W. No, that's Palo Alto. Yes. I'd put that on the list. Palo Alto Networks, very similar to Palantir, making that V pattern. Craig? Yeah? Boom, boom. All the way back up in there. What are we looking for? Oh, if you're in it, then you're squeezing it. That was a new low, but that was a V low. That was a V low. So for me, now it's still a big if. You'll notice it did something kind of similar back here, but it dropped all the way back down. If that same thing happens here, nothing's there. But if I get one of these, then I start thinking, wait a second. Now I'm looking for something like that. And that's where that trade comes in. Given the prevailing market posture, we should have some put prospects. I'm not gonna create a bear list until we orient negative, because I don't want to be the catalyst because a lot of times, especially for new traders, they like to paper trade things to the downside. But I agree that we should start having that thought process. I mean, we've been talking about puts for a few weeks now. I mean, even if you look at last week's market action, got into a handful of puts. If you look at last week's action, it was very choppy. Like it gaps down, rallies up, gaps down, rallies up, rallies more, holds, and then ultimately it drops. But it was a choppy week. Now, if we see this thing turn and go up and get here and roll over like this, that right there is definitely somewhere where we would be putting on puts, because at that point the posture continues to orient down, and then it's a much more appropriate technical setup, if that makes sense. So we're very, very close to that. STX down, SYY. I would still actually kind of put that on my list as if it holds the 50, there could be an opportunity. TJX is no. Tesla, no. TSM, I'm going to say no. There's up. Vail. Viking, no. VOD, no. WDC. Ooh, WDC could be a maybe. Let's put it on the list, actually. If that holds that 50. Walmart. Walmart broke. Still held the 50, but broke that previous pattern. I would expect most people have closed. If you're still in, have an idea of what your exit is. I would have expected more defensiveness out of that. List is small. Smaller lists, lower score. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, about 15. Made some profit on Walmart. Okay, you got out early. Love it. Well done. Well done. Okay, well, we're a little over. We'll meet tomorrow morning. We'll see what the futures look like tonight. We'll see what they look like tomorrow as the market opens. We'll just be more careful. That's it. Less risk, more careful, more caution. And let's watch until we see clear signs that things are improving before we really start to. Other than that, we stay hunkered down. We're in our we're in our foxhole to some extent, and that's fine. Protecting ourselves until the next opportunity really comes, and then we look to move again. It's good to see everybody. Have a great rest of your Sunday. I'll see you guys in the morning. As always, happy trading.